This is Eric Mrkt with Mrkt.com with the weekend market analysis for the weekend of May 25th and May 26th and 27th of 2019. Take a look at markets here with about 1 minute to go. And this is end of week trading, end of Friday's trading for May 24th, 2019. Let's take a look at the closing numbers, or what are going to be the closing numbers. S&P 500 for the week, down about 1%. Let's take a look at the Dow. Let's take a look at where the Dow closed for the week, or is closing for the week. Dow down about 0.7% for the week. Let's take a look at where the Nasdaq is going to be closing for the week. And we can see that Nasdaq down about 2.3% for the week. All right, so let's begin here. But before we do, let's take a look at the closing numbers here with a couple seconds to go before the end of session. There we have the bell. So that's the bell, end of trading session. Let's go take a look at the S&P 500 weekly chart to begin with. We can see S&P 500 now closing down about 1% for the week. Now, one of the things we can see here is clearly we had already shown confirmation of a failed breakout based on the levels we were watching here. Since that failed breakout, of course, markets have been leaning lower, with the last couple of weeks being to the downside as a consequence of this failed breakout on the weekly. If you had been following my analysis, you can see that we had come back on the weekly chart to test what was the break of the highs, or off the highs of 2018. We got this break here. This turned into resistance. At the highs of 2019 so far. So the pullback over the last couple of weeks is consistent with some of the things we've been following. Now, take a look at the S&P 500 daily, and I think there's a nice way of looking at this, and it is the fact that at about 2800, so let me just draw a line around zero zero. And what we're going to see here is, looks like the market is very aware of this level. So let me just draw the level here. Somewhere around here, we get an interesting perspective as to what the market is doing. We got support here. In fact, all right, let's do this again. You got areas of support here. We broke down below that level, turned into resistance areas, turned into a breakout level here, and then turned into support on multiple occasions. And we can see over the last 2 to 3 weeks, we've bounced on this line, including the lows for this week. So the market is very aware of this 2800 level. So until we break below that level, we can say the market is doing its best to hold and stabilize after a recent pullback. Now, keep in mind, we are also trading between an upward sloping 50-day moving average and a flat 200-day moving average. And that is just another reason why, from a technical perspective, the market seems to be pulled in either direction. We're in a no man's land, in my opinion. But I would say the key takeaway is, if we are trading above 2800, that remains constructive for the market. At some point, should we go on to break below this level, then that would be bearish. Clearly this week, at the lows of this week, and I believe last week, the market has found support around the 2800. So we can see the S&P 500 is finding support where it needs to in the short term. A break below this level would definitely be something to watch for, maybe even a reason to trigger fresh selling. So this continues to be the level to watch in the short term for guidance. That concludes the free portion of this video. The rest of the video is for paid Mrkt.com subscribers. Do enjoy the long holiday weekend. I'll see you in the next edition. For subscribers, let's continue on. So one of the things that we should continue watching here as we go into the new week is we need to keep in mind that we did not drop below RSI 50 as far as the S&P 500 is concerned. In fact, let's check the other major averages. Let's take a look at the Dow. On the weekly, the Dow did close slightly below RSI 50. What that means is traders need to be careful here, because if the market can recapture the RSI 50 level in the new week, then that's going to be good enough to start pushing the market higher. So watch that to see how it goes. If we take a look at the Nasdaq, and on the Nasdaq we close slightly above 50. So we can see here we might have a volatile session, would be my suggestion. Because based on the Dow could easily bounce back above RSI 50 for a positive, strong push to the upside, while the Nasdaq, on the other hand, might be moving below RSI 50 for the week with the increased momentum to the downside. Now, one thing I should point out here is on all of this, we need to be careful, because if the market can bounce back above RSI 50, that tends to be very constructive. In fact, generally speaking, it tends to suggest that you have a good likelihood of going back to the previous highs and testing the highs. For example, here we held RSI 50, took a couple of weeks, but in time we would come back to test the highs and actually improve on them. Same thing can be said for the Dow. If the Dow can bounce back above the RSI 50 level, push higher, that's very good for market bulls. It would be visually similar to this time period where we held RSI 50 on the weekly, and in time we would go on to test the previous highs and improve on them slightly. And of course, same thing for the S&P 500. If the S&P 500 can hold above RSI 50 with uniform action just like it did here, you can see that over time it would bounce back to test the previous highs and actually improved on them. So if the market holds this level here with uniform action, that is suggestive of a market that is showing likelihood of testing previous highs, if not improving on them in good time. In other words, let's continue watching that RSI 50 level on the weekly for the major averages for guidance as to what could be taking place. Now, one of the things that we can see here on all of the charts that I'm looking at, or maybe let me say most of the charts, and this is consistent across the board, is on the daily charts. We are showing a lot of life and a good reason why this market could bounce. You can see this line here gave us a nice entry on hindsight. This turned into uniform activity support over the last couple of days. Bounce on the line again, and now we are trying to bounce on the line. So the indication here is that the more we continue bouncing on this line and holding, the more we are going to be pushing to the upside. Of course, we continue watching this level, because sliding below this green line would be a sign that this market is due for some type of a strong up move to the downside. And of course, if that is going to take place, as we've established earlier in the video here, then the S&P 500 would have to break the recent support. It's been getting around the 2800. As we can see over the last 2 weeks, market's been coming back to this level and successfully so far finding support around the 2800 level. So I would use this to simplify this as simple as possible. Anything above this level is bullish and showing a market that found stability where it needed to find support. Anything back below this level would bring some increased selling and momentum to the downside. Now, of course, one of the other things is, in fact, let me touch on the 2 hourly before I go to the big picture. Even on the 2 hourly, there is a sign here that this is good enough to move this market higher. based on RSI lows line support, and we can actually even go back to the lows here, use that information. So we move above this level here, we can draw our uniformity line, something like that. And of course we can see that we did find support here on the green line of the lows there. We did come close to the line here, not quite to the line, but found support above it, and we can see that we've been holding and holding this line throughout these pullbacks recently. In other words, even on the 2 hourly, the market's been refusing to drop as we found support on the blue line and on the green line. So green line support still offering the market some type of floor, and we can see that this is also giving us support. So as long as we're above the 2 lines, the green and the blue, on the 2 hourly, short term, again another market showing indication that it is likely to move higher unless we break through those 2 lines. Now, the thing here is, as I have been talking about, is the big picture, in my opinion, has not changed. The big picture remains very bearish in my opinion. So we got that red line showing resistance. Keep in mind the red line just so happens conveniently to be around the RSI 61.8 level, which makes this level very meaningful. But one thing I've been stressing every time I have an opportunity to explain this to you guys is the big picture is this was the major break in 2000 before we go into a massive bear market period. Massive. This was the breakdown period here in 2000, late 2007, before we go to this very powerful bear market phase. And of course, as we know by now, the monthly chart already gave that sell signal. In the short term, that continues to favor the possibility of a strong move to the downside. Let's not forget that the big picture here is that so far we are contending with a failed breakout on the monthly. Now, we have established so far, if we take a look at the time frames, that the 2 hourly we can say is looking decent to good. The daily looking decent to good. The weekly showing signs of potential support around RSI 50. But the monthly continues to be very bearish. So what do you do with this conflicting information? Generally speaking, you always want to default to the big time frame, which means that the monthly charts are still controlling. Now, I should add here that by the time I do another video, we are probably, actually not probably, we're going to be in the month of June. So more than likely, there's a possibility that this monthly charts could be looking slightly different. But right now, since we are down for the month, we have a failed breakout on the monthly. The conclusion here is that the big picture continues to be bearish. And of course, one quick other line to consider is this backtest line, which connects the lows here, early 2009, the lows of early 2016. There's a slight support right there. You can't see it, but it's there. We turned into a break level, as we know, in late 2018. And now, as we began the month of May, we found resistance on the black line, backtest failure, in other words. So this is another reason why, personally, on a big picture time frame, I still see and maintain that we are already showing the first signs or the initial signs of a massive bear market ahead. Until the monthly chart changes this look, that is my net conclusion, that the monthly charts suggest that to be on the lookout for a serious bear market down the road. And when I say serious, I mean to test the lows here or even here. Or, I don't want to go that far, but even this could be tested. Is it possible? Of course it is possible. Even this can be tested. Not everything is on the table. But you know what? Let's take it moment to moment. Alright. Now, I would go and take a look at the NASDAQ, the Dow, semiconductor index, financial space, real estate sector. Conclusions are the same. The charts are pretty much net mirroring each other. So what we can do here, take a snapshot of other markets and you'll see the same thing here. For example, take a look at the Canadian market. On the monthly, same thing. Monthly charts continue to be bearish. And this is true pretty much on most of the major markets that I track. We got topside resistance here on the Canadian market. We have another market showing a failed monthly breakout, which is never a good sign as long as that failed breakout continues to be the case. We have a backtest failure. You can either draw it this way. We can see that there's a break here in 09. Draw a line that way. Uniform activity rejection gave us the highs there. Uniform activity rejection gave us the highs there. What I'm getting at is right now we are seeing that this recently turned into resistance. Again, all of these charts pretty much mirror each other, so there's no point to go through each one of them in detail. S&P 500 has a good representation of all these charts. We can take a look, for example, at the EEM. And what we see here is again the monthly charts. Keep in mind the emerging market ETF, EEM, down about 9% because it is moving its monthly RSI below 50. Not really a big surprise because it had shown resistance here. In fact, we can say this is double top rejection. And then moving below RSI 50 means a big down month. So there's another monthly chart, emerging market snapshot. Take a look at the EWZ, the Brazilian market monthly chart. And again, we can see that this is pretty much showing resistance exactly where we suspected there could be resistance on this red line. And so far holding above RSI 50. And I'll show you how the monthly charts are giving us one view, just like the S&P 500 is giving us one bearish view, but the other charts look okay. We can take a look, for example, at the European market ETF, EFA, and again here we see here resistance at this break point mid to September of 2018, somewhere here, turned into resistance. There's a likelihood that if this market is not careful, at some point drops below RSI 50 and has a bigger drop. If we take a look, for example, at the VT, the Vanguard Total World Market, and we can see here, just draw a line around RSI 61.8, and we see why this turned into resistance. And so there you have another monthly chart representing now the entire global market showing resistance. Now, of course, that resistance line had been a buy point when we moved above it in 2017 here. All right, so that's another monthly chart. Let's take a look at the ACWX. And this is an ETF that tracks the global markets, ex-USA, so without the US. And we can see again here where we broke down. This is where we broke down in 2018. Draw a line from there. This is uniformity at its best. A method by yours truly. We see resistance here. All right. Also, the threat of moving below RSI 50 looms on the monthly. Let's take a look at, well, that's it. Now, what I wanted to show you is that all of these charts look bearish on the monthly, but they look different on the weekly. On the weekly, dailies, and 2 hourly. So this is a Canadian market. The monthly chart continues to be bearish. We have a failed price breakout, RSI resistances as we discussed. Now notice the weekly chart here has not broken below RSI 50. So if this thing was to turn up and coil higher, this is good enough support. So the weekly yet to break down. Again, very similar to the S&P 500 as we established. S&P 500 trading below the 50 and the 200-day. So is a Canadian market. Again, all of these charts are pretty much mirror images of each other, just with a little bit of an adjustment here and there. Again, on the daily, you can see that this is where we had a nice entry at the beginning part of 2019. We've come here and tested it twice and we are holding. So as long as the blue line is holding, the Canadian market could easily move higher. Of course, if we go on to break below this line as we established with the S&P 500, then that's going to be a fresh sell signal. On the 2 hourly, same story. We can see on the 2 hourly, just like we saw with the S&P 500, we can draw it this way. We got RSI lows line offering support. We got this uniformity line offering support. This is similar to that of the S&P 500. So the monthly charts, being the bigger time frame, are controlling, in that I would conclude, given the conflicting messages, that the monthly chart continues to control. And as long as the monthly chart is down for the month for now, we can conclude markets have a bias to the downside. I wanted to give you one chart to watch and a price level. That's for the VIX. And for the VIX, let me give you the price level to watch here, or set an alert. If the VIX was to come back and break out above the recent daily closing high recorded at some point in May, a breakout above this level would actually be an indication of a market that is going to be in trouble. So watch this level here. The recent daily closing high for the VIX is at 20.55. Anything above this level, especially given the fact that we do have what looks like a flattening out 50-day moving average, a breakout above 20.55 would be very powerful, in the sense that it would be suggestive of a market that stocks would be moving lower and moving lower in big chunks. So anything above 20.55 is a sign of a market that is going to be pushing lower. If the VIX cannot break out above 20.55, that favors the general market. Take a look at the dollar, and down for the week, but this is the monthly chart. The monthly chart continues to be positive for the month. The one thing I was saying from last weekend market analysis is we gotta be careful here if you're bearish on the dollar, because if the dollar climbs above 69.1, if the dollar was to climb above 69.1, that would be a sign of a very strong momentum in the dollar, which would push commodities lower. At least that would be the theory. And we can see that the UUP, which is what I'm using here, continues to show this look where we have the Mrkt as close to 3-year highs as it gets. In other words, this would meet the minimum requirements. This is good. This is good. RSI is close to 3-year highs, if not at 3-year highs. So as far as the monthly chart is concerned, UUP is showing signs of life. More importantly, should UUP go on to trade above RSI 69.1, that would be a reason to be very cautious as far as assuming that commodities are going to be in play. Now, if commodities are going to be in play, of course, you'd want the RSI for UUP to be rejected around current levels and at some point to point down. On the weekly, we can see that we had a down week. And again, you can't really read too much on this, because take a look at GLD, which tracks gold. We can see generally it's been hugging the 50 RSI level. and we can see price has been sideways. In fact, the daily chart gives us the best view, where we see another market trading in a confusing spot. In other words, we have prices trading below a downward sloping 50-day moving average, and sloping between an upward, trading between an upward sloping 200-day moving average. So net, you're stuck in this range. You got a 50 dropping, 200-day going higher, sign of confusion, sign of a sideways market. It's very difficult to be aggressive in either direction when you have this type of a situation. So I would say this continues to trade sideways, and it is actually trading sideways. Can't read too much as far as I am concerned, while this is the look on the chart. And sometimes instruments do go sideways. It's just part of how things go. At some point, if we can clear this level to the upside, that would be bullish short term. If we break below this level at some point, that would be bearish. So there's something to consider there as far as the moving averages are concerned. Or we can do it another way, which is to consider the price itself. And see here we have topside resistance on the daily chart, and we can draw. So if we take the prices here, we can see that movement above would be bullish, above the price daily closing highs, definitely a good thing. A break below this range would be bearish in the short term. So this week we saw a strong pullback as far as crude oil is concerned. Here I am using USO, but this is consistent with some of the things we were watching here, and also the fact that we dropped below RSI 50 for a big down week, just like as we had a big down week during this period here. Something we talked about, I believe, in the last weekend market analysis video. And now we are faced with the possibility of the exact opposite, which is if we can move above 50 on the weekly, that would be good for a big up week. Keep in mind, if you take a look, for example, on the monthly chart, the risk was always that movement below RSI 50 on the monthly would be good for a big down month, which is exactly what we are seeing. So as long as the monthly is pressing below RSI 50, it tends to suggest that we are going to close towards the lows of the session, the lows of the period, which would be the lows of the month. So the risk, in my opinion, here continues to be for lower prices. But as we've established, we can do some analysis, figure out where we came off the lows here. And what we see here is we can see a clear correlation with the RSI movement here, where we jump above this level, we start this movement higher. Market's been responding well since those lows. And now what we are doing, given Friday's action, you can see that as of right now, this is showing uniform activity support. And as long as that's the case, we can see that visually, this is giving us indication of high probability. Chances are that we find stability, if not support, around current levels. Keep in mind, we are also now trading just above the 200-day moving average. So we got potential support from the 200-day moving average and potential support from the RSI uniformity line. Of course, should we go on to break below the 200-day, that would be bearish. Red flag of some sorts. And if we drop below the uniformity support line on the daily, that would be another red flag. Net, the fact that we found support here around the 200-day moving average and here on the uniformity support line, in my opinion, suggests that day to day we are finding support exactly where we need to find support. So of course, one way to improve the picture as far as crude oil is concerned is in the new month of June. Should things turn and coil higher, that would be good enough to stabilize the current drop. Otherwise, the monthly, as we've established with other monthly charts, continue to be bearish given that this is the month we are dropping below RSI 50. So again, another area of the market showing big picture is bearish. Smaller time frames are showing improvement. Again, whenever we find this kind of conflict, we have to resolve to the big picture being the controlling parameter, which would indicate that over time it would make more sense, as long as the monthly charts are looking the way they are, that stocks and other sectors like commodities are pointing to a downside market. Be very cautious. If UUP goes above 69.1 on the monthly, that's a sign of a market that will be pushing commodities lower. All right, let's take a quick look at cryptos. I'm going to be taking a look at Bitcoin. And here we can see it's trading at about 80.80. Okay, so let's begin with the level to watch if there's going to be another push to the upside. Let's go to the daily. And I'm using Bitfinex. So the numbers could be slightly different depending on what charts you are using. But what we're going to see generally is this daily closing high here is the level to watch for a potential breakout. As far as Bitfinex is concerned, the level to watch here is 8188.30. So of course a breakout above that level on the daily chart would be good. One thing you'd also want to see, you'd want to see the RSI punch through RSI 69.1. That would be bullish. So that's the bullish setup. If it happens, that would push things to the upside. The level to watch is this recent daily closing high here. The numbers might vary slightly. I am pretty sure on Bitstamp. So on Bitstamp, it's 8200. Again, it's this daily closing high here. You'd want to see the RSI also punch through RSI 69.1, just like we did here. You'd want to see movement above 69.1, as we can see what happened when we jumped above 69.1. Excuse me. So if you're looking to be long Bitcoin with a fresh buy, you might want to wait until it breaks out above the recent daily closing high. Go to the weekly on Bitcoin and you can see, and what I'm going to do is refer you to the tail end of last weekend's market analysis video, where I explain why I was suspicious and why I continue to suspect that on the weekly chart we stall based on my observations from last week. So to save time, if you want to see why, take a look at the tail end of last weekend's market analysis video, where it looked like chances are very high we end up rolling back below RSI 69.1, and we end up rolling below that level with some type of uniform activity, suggestive that around here is where we stall. Something else also on Bitcoin is on the monthly, now that we have one more week before the end of this month, is I'm starting to consider the monthly chart more and more. And what we can see here is there is a possibility that we are coming back to this level here. And maybe the best way of showing this is explain where the line comes from in a sense. It's this line here. There was a major break here off the highs there at about 9,000-10,000. So we are coming back month to month. We're going to be testing this line. Of course, bulls would like to see the RSI move above this level so as to advance things to the upside. Keep in mind, for the month, Bitcoin is up 44%, which is a huge gain after another big gain in the month of April. So at the same time, this black line is an area to watch, because coiling below this on a month-to-month basis as we begin the new month in a week or so, that would be bearish. Keep in mind, this level has been useful in the sense that on hindsight, or going backwards, if we go backwards in time like this, you can see how it was resistance and a break below the line here. We move above the line for a bullish momentum. We find support on the line for the lows here. We found support here momentarily for the lows somewhere here. And then of course we would go on to break below that level. So of course this area, this black line, is going to be guidance on a monthly chart going forward. Above the line is good. Resistance, especially confirmation of resistance on the line, would be bearish. So you can see here, this month again up 44%. The previous month we were up 34%. So huge returns month to month for Bitcoin. One can also say from that perspective, maybe a pullback is what makes more sense in the coming weeks and in the coming months. If we take a look at the total crypto market ETF as calculated by TradingView, I want to draw a simple line connecting this low here on the monthly RSI and this low again. Again, this is the monthly chart, and I'm just going to extend that line. And you can see how so far on the weekly chart, as I was speculating, this is where we stall. And as long as we are below and showing resistance on this line, that suggests that around here we stall. Otherwise, it would be very bullish if we can take out this area. That would increase momentum to the upside. Again, net, it might explain why the RSI is coiling down, because of that backtest resistance line. On the monthly, big picture, again, we can see here on the monthly, just as we established with Bitcoin's monthly chart, month to month, if we take this breakpoint for the entire crypto market and draw our uniformity line, we can see that this is going to be a challenge. What the bulls want to do is clear and move above that area. Otherwise, bears would be happy to see resistance around current levels and coiling down. In other words, a respect of that black line is what the bears would want to see. Now again, if we go and backtest this same line, you can see how it coincides very nicely without any adjustment, coincides with this blast area in early 2016, where the crypto started getting strong momentum. Alright, so just keep that in mind. So month to month, if we stall, it's because of the monthly chart showing resistance around this level here. If we take a look on the 4-hourly, we can see that this is an area where we can expect something to happen here, given that this was the recent pullback area. And we get a warning drop. Now we can draw a line from here. Should be something like that. You can see how this turned into uniform activity rejection of those highs, and now this is where the cryptos are trading. Of course, what the bulls want to see is movement above this area, and bears want to see confirmation of resistance on the red line, on the black line, excuse me. Once this is confirmed as resistance on the 4-hourly short term, that would indicate momentum to the downside. We'll see how it goes. Otherwise, for Bitcoin, if you're looking to buy Bitcoin, insist that the RSI on the daily moves above 69.1, while prices move above 8188.30 as far as Bitfinex exchange is concerned. This is Eric Mwathe with Mwathe.com. Do enjoy your long weekend. And of course, I did not have any new ideas in terms of stock picks this week because the market, as you know, was extremely volatile, and I remain with the big picture that markets are pointed lower, and so don't want to be very aggressive in a market that I suspect is hinting at a major bear market. Sometimes the weather dictates how we are going to respond to outside activities. Eric Mwathe with Mwathe.com. Again, enjoy your long weekend. I'll see you in the next edition. Hopefully, I'll be sending you some ideas throughout the course of the new week. Peace and blessings. EACWX. Oh, by the way, this is how the markets closed. I am out. Mwah.